What's up, everyone? Welcome back to NYU Grads Podcast. This is Monday, September 25th, after market hours. It was definitely a slow burner today. It really felt like a holiday, and I think for everyone that I wouldn't say observes Yom Kippur, it certainly was a holiday. And I just noticed a lot of less activity out and about, even in the streets of New York. I mean, we've had almost 72 hours of nonstop rain, but from what I hear from my colleagues and my friends who work at different organizations, they were off who celebrate Yom Kippur. So, yeah, it was a very light day. Let me just jump right into the breath numbers. This is going to be a very short podcast today. But when you take a look at today's breath, we had 95 new highs and 759 new lows. Can that be right? It felt like the market was closed, but that is what I'm seeing on the data feed. I will double check this, but if that is true, that's really sneaky. Um, 47% were advancing versus 48% declining. We still have 79% trading below the 50-day moving average. I have to double check the new highs versus new lows. I can't believe that that number is correct. Let me check my data feed and I will update you guys on Substack notes. The complexion of the day was low volume. We opened down. It looked like we were going to continue the sell off, but then right around 11 o'clock, markets bounced, and we pretty much were in a range for the entire afternoon. Almost looked like a mini diamond pattern. And I have posted on Substack notes we're either going to break out up or break down from that diamond. We actually broke down, but that breakdown failed and we broke back up into the range and we closed the day at the highs. So that's good news. So maybe we can mount an offensive bounce here, but it's going to be light, I believe, outside of any headline risk until Thursday. Jerome Powell is hosting a webinar with educators on September 21st. On September 28th, on Thursday, live at 4 o'clock in the afternoon Eastern Time. So I think everyone is going to be on pins and needles until that time. When I take a look at the market data calendar for the rest of the week, there's really nothing that's earth shattering. You have housing related on Tuesday with Case-Shiller home price, new home sale numbers, consumer confidence. There is a federal Governor Bauman who's speaking. And on Wednesday, we have durable good orders coming out in the morning pre-market. And then Thursday in the morning, you have jobless claims and GDP revision and more pending home sales related data coming out around 10 a.m. Eastern. Obviously, there's no earnings now. We're heading into the end of month and end of quarter. Seasonality is on the side of the bulls. And typically, once you have earnings come out in October for Q4 typically has led into a rise in risk assets and stocks into the holiday season, into Christmas. That's why they call it the Christmas rally. But let's watch the Magnificent Seven. Let's watch yields, which are still very, very high. If you take a look at the yield, it is breaking out right now. We are at pretty much multi-year highs here. You'd have to go back to like 2000 and like last year basically to see where we're at, and we are breaking out of that. So we're at let's see, how far do you have to go back? I'm just looking at the chart here. You'd have to go back to 2007 to equal today's 10-year Treasury rate. So this is not good. If we continue to increase in yields, mortgage rates, interest rates, and energy and oil, that's going to be very big headwinds for the economy going into the holidays. Taking a look at what was strong or stuck out today, when I take a look at sectors, what led was energy to the upside, and what led to the downside was consumer defensive. Technology was fourth on the leaderboard. So you want to see technology jump up to first place in the leadership position. Potentially you want to see financials start participating, but that's not the case right now. On the strong side, you had ARM, which is the recent IPO, bouncing at 6%. It's been kind of on shaky ground. You had CAVA, which is IPO'd this summer, up almost 5%. You have KYVO that just IPO'd last week, up 3.8%. And you had Treasury yields up 2.3%. On the weak side, you had VinFast Auto down 10.43%. That is the Vietnamese EV maker. That looks like it's just going to keep going south. I mentioned to stay away from these type of SPACs. And you had Carvana down 4.14%. And Red Rock Resorts in Las Vegas down 2.37%. That's really all I have today. So I'm not going to belabor it. I hope you had a great Monday. I'll see you guys after the Tuesday session. Later.